Hello and welcome to another video of the Sebastian's Investment Show. And in today's video, we have a really exciting video. Today, I'm going to take you through a review of a stock that is currently taking a huge pullback that is really common and popular all around the world. And it's a really brand name and a really known company. And today, I will try to see a little about how the business is developing, if this is potential investment for me in the future, why the stock dropped so much in the after the quarterly earnings, and also some of the financial metrics of the company. So here is a little analysis of the stock that's dropped 20%, which is Salesforce, which is a really high quality company that has grown tremendous over since its IPO, really. During the 5 last years, it's dropped significantly after its current fall after earnings, which you can see it dropped 20% after earnings. So there must be something that is happening to this company which is making it develop in a bad way. And I'll take a little through how the earnings went. So if we read this article, we can see that Salesforce stock tanks on weak guidance amid hopes for artificial intelligence boost. With software stocks already struggling, Salesforce reported first quarter earnings that topped estimates while revenue missed. July quarter revenue guidance for Salesforce stock came in well below expectations. Shares plunged as investors await a boost from artificial intelligence products. This shows a bit about what the investors expect for the company, and also shows that they really showed that they didn't have the same expectations as the analysts and investors of the company. If we take a look a bit on the financial metrics, you can see that Salesforce earnings rose 44% to $2.44 per share from a year earlier on an adjusted basis. Also, the San Francisco based company said revenue climbed 11% to 19.13 billion, which is a really amazing growth on such a high valuation stock, because it's currently trading at 211 billion US dollars, which is an incredible large stock, and has a lot of analysis on the company. The analysts also had forecasted an adjusted profit of $2.37 per share and revenue of 9.15 billion US dollars. So they slightly missed on the expectations of revenue, and they slightly beat. So basically they did just as expected, a bit worse on the financial metrics that the analyst was guiding for this quarter. But what really is the catalyst for this earnings call is the future expected revenue and growth potential for this company. Because for the current quarter ending in July, the Salesforce projected revenue in the range of 9.2 billion to 9.25 billion versus estimates of 9.345 billion US dollars, which is an incredible, which is a huge margin. This is around 100 million US dollars, which shows that the company's projecting a slower earnings growth than what has been expected of the analysis of many people that track this company. And the reason they made this projection is because, as they explain themselves, Derek Wood explains that weaker bookings were impacted by tougher spending conditions and some disruption from go-to-market changes, but management remains constructive on strategic growth areas and expects a stronger second half. So they really say that some of the reasons why they are making this guidance lower than expected is because of the weaker bookings that has been impacted by tougher spending conditions because of the higher interest rates in the past couple of months and last year basically. So for the full fiscal year now, Salesforce now expect adjusted earnings to be $9.86 to $9.94 per share, up from its earlier forecast of 9.68 to 9.76. So this shows that although they missed on revenue guidance, they really the profit hasn't gone down because of this reason, and it might be quite an overreaction because the stock plunged 20% yesterday if we take account the aftermarket. So this is one of the worst stock days for Salesforce in 2 decades, which is an incredible sell-off. And so I want to go a bit through some of their financial metrics and if this is a potential buy after this recent sell-off, because as you can see, it's compounded for a long time at great pace and great value, and has been an incredible value stock for the investor, which I like to see. So let's take a look in it with open eyes. So we can start. The company is now trading at 38% and 38 PE. Price to earnings compared to 52 that was before the quarterly report, which is not a lot for a fast-growing software company. The price to sales is 6, which is pretty reasonable for a company that has a really high gross margin and a pretty decent net profit margin. So this business model is really effective, and this has also been proven many times before because of the past growth it's shown, because as you can see, the revenue just keeps on growing. This is mostly because of the annual recurring revenue that Salesforce has, which is a big part of their business model. But you can also see that the earnings has been quite varying during this time. So you can see it's been negative for many years, and they became profitable in 2016. They lost some money in 2017, then lost money again in 2020. So this really is showing some weakness in this company, because during harder times and during high growth phases, you can see that the earnings isn't really following with the revenue, which I would like to see. If we compare this to a company like Microsoft, which is an amazing company as well. I'm not currently invested, but I really would like to. You can see that the earnings is always following the revenue, and it's really almost no years that they are losing or earning less than they did in the past year. It's only during the period before 2019. This really shows that Salesforce is a bit more cyclical business, I would say, because although it's not cyclical, but it gets more impacted by different spending habits of the consumer and if the business wants their product or not. But a company like Microsoft, people always would use their products, and it's a bit more robust, you could say, than Salesforce. But still, Salesforce is an incredible growth story, which you can see here. It's grown from 3 billion revenue to now being 35 billion. So this definitely is a high grower and a high quality investment potential company. But it's a bit shaky after the last guidance, because if you see, it's not really growing as fast as it did earlier in the early stages, which is somewhat expected because of the large size that it currently is. But it's still showing some weakness based on this chart here, which shows the earnings and revenue. If you also take a look on the free cash flow, we can also see that almost half of their earnings is stock-based compensation, which is something I don't really like to see in a company, because this makes me deluded as an investor, and makes more stocks in the market, which works when the company is trading at an astronomical price and they really get a good value for giving them stock instead of real cash. So it could be good, but in many cases it's really a sign that they are overspending on employers. But it's still really important to spend money on their employers. But if we subtract this from the stock-based, if we subtract the earnings and stock-based compensation, the earnings is a lot lower than what it's saying here. So that is a bit of a bad sign. Also, the financial metrics is somewhat bad compared to some of my high quality companies. It's lower than the industry. So you can say, why would you want to pay a premium for a company that is returning less on its equity than its industry? It's returning less than the assets, return on assets than the industry. And it also don't really make a lot of money on their capital employed, which is a really sign that the business isn't really in a healthy state, because if they can't generate a lot of money from a software company, something must be a bit wrong. They don't have a lot of good investment opportunities currently. They don't see many opportunities, and they don't have the ability to return high capital employed, basically. So compare this to companies like Microsoft. They have like really many other business areas that they could invest money in and earn high growth on this company, on other companies, such as you can see the cloud business of Microsoft, also like their service revenue, which comes from like Microsoft Teams and many other places. So this is a bit of a weakness to Salesforce, that they have really poor financial metrics compared to others, but it's still not poor, but based on others, it could be a lot better. This also can be seen on the equity and debt. You can see that they have to use some debt to grow at the pace that they have done, compared to other companies which maybe would not use debt because they make a lot of growth just based on the reinvestment opportunities. So instead of growing through debt, such as Salesforce has done, not a lot of debt, but a bit, they invest only with their cash and their free cash flow, which is a sign that they have to grow with debt. And I don't really like companies that use a lot of debt. So that is also a bit negative of the company. And I really do like the ability to hold the salary low, and also they've grown incredible. So this isn't really a shame for Salesforce, Salesforce, because it's really great company, but I still don't feel like it's the quality of a company that I look after. I think it's decent. It's currently trading more reasonably during the current drop, which is expected if they don't beat the analysis expectations when it's trading at 52 PE. So a miss on revenue guidance could lead to a bad day, such as it had yesterday. So that is my final thoughts on Salesforce. It's an amazing company. It's grown incredible over the past 10 years. It's been an incredible winner compared to the market. But I also still think that it's not better than any other company that I have in my portfolio, and I'm paying a really hefty price to this company for for owning their future earnings. But when they can't beat their expectations and show that they have some issues in their business model, this really just is a red flag sign for me. And for that reason, I really would like to just say that this is not a company for me currently. I need to see more growth. I need to see the earnings or price to earnings at the lower. And then maybe I could take another look at it. But currently, this is not an investment for me. But please tell me if it's an investment for you and if you're invested in the company, and potential comments and something I didn't mention in this video for a future catalyst for Salesforce, which can show that my analysis is wrong. So yeah, I would like to thank you for watching the video. Please leave a like and a comment if you have any thoughts on Salesforce or my portfolio or any other stocks you want me to look at. So thank you for watching the Sebastian's Investment Show, and I'll see you guys very soon. Later.